So I already made a video talking about 4 ways that you can boost your tax refund in 2020 for the 2019 tax year. And if you haven't watched that already, I'd highly recommend that you go and watch that as well as this video because both of them are very helpful and both of them are going to help allow you to maximize your tax refund in this year and hopefully in many years to come. So hopefully I remember to put it up there using the little YouTube thing. Today in this video, I'm going to give you 3 more tips that you can do to maximize your refund. And these tips are really going to help you out when it comes to next year in 2021 when you want to file your taxes for 2020. So if you start utilizing these tips right now in 2020 while we're still in the 2020 tax year and beyond, hopefully these tips become kind of evergreen and you can just use them for many more years to come. But right now, these are going to be able to help you out, help you plan for your taxes, and hopefully they can get you to pay $0 in taxes if you do them right, or at least reduce the number of taxes that you do pay to a very minuscule amount. All right, so tip number 1 on how to maximize your tax refund. The first thing that you need to consider is itemizing instead of taking the standard deduction. Now, I really love the standard deduction. I talk about it all the time. It's because it's projected that 9 out of 10 people are actually benefiting from the standard deduction rather than itemizing. Now that the new Tax Cuts and Jobs Act was enacted in 2017. So now with the standard deduction being so high, most people, usually about 9 out of 10 at least, are going to benefit from the standard deduction. But there is that 1 out of 10 or maybe 2 out of 10 that would benefit from itemizing. So itemizing is going to be more beneficial for you if you have certain expenses that are really high. And keep in mind that usually itemizing is going to be best for those of us with high incomes, maybe say just like $100,000 or more. Now, not always, but if you have a high income and you have a high amount of expenses in certain categories, then itemizing might be better for you than a standard deduction. If you think you might fit into that bracket, then it might be best for you to keep track of receipts and keep track of all these expenses that could be deductible if you were to itemize. And if that is also the case, then you should definitely seek the help of a tax professional if you are going to itemize, because itemizing is definitely a lot more complicated than taking the standard deduction. So there are a few big main deductions that you would take when you itemize. And the first one that everyone knows about is the home mortgage interest deduction. So if you have a home or possibly even a second home, you can deduct the mortgage interest on those homes up to $750,000 in 2020. So that might be a really large amount depending on where you live. If you live in one of the really high cost of living states, then that $750,000, keep in mind that it does cap out at that amount. So it doesn't really become any beneficial to you, if you have a $2 million home. But if you have one home or possibly even a second home that is your residence, you can claim mortgage interest deduction up to $750,000 in 2020. The next big itemized expense that a lot of people know about is known as the SALT deduction, and that stands for state and local taxes. So any kind of taxes that you pay to your state or to your local municipality is going to be included in that. So that can be like sales tax, state sales tax. That's going to definitely include your property tax and things like that, even like local income tax if you have one of those. And those are actually capped out at $10,000 deduction in 2020. So usually this really affects mostly high income earners and those living in high cost of living areas that usually pay a lot of taxes. Another big itemized expense that you can deduct is the investment interest expense. So any kind of expenses that you paid for your investments, whether that be like advice, or any kind of other fees that related to your investments, you can deduct those up to the amount that you actually made from your investments, like the amount of interest you made from your investments. So you cannot deduct more expenses than what you made. So say you made $1,000 in interest, you can deduct up to $1,000 in fees that you actually paid. Okay, and the next one is Medicare expenses. So if you have medical expenses, you can deduct any kind of medical expenses that exceed 10% of your adjusted gross income. So if your adjusted gross income is $100,000, any medical expenses that exceed 10% of that, or $10,000, you can deduct that as an itemized deduction. And it's a little bit less if you are over the age of 65. If you're over the age of 65, then it's only 7.5% of your adjusted gross income. Next up, we have charitable contributions. So charitable contributions are deductible if you itemize. If you take the standard deduction, then they are not. You can use this itemized deduction for things like donations you make, so property, and you can also use it for cash donations. There are limits on how much you can deduct using charitable contributions or property contributions, but they are something that you can include in your itemized deductions. And after that, you have some miscellaneous deductions that you can do. Like I said before, itemized deductions and claiming itemized deductions is a lot more complicated than the standard deduction. So if you've never done it before and you're not really savvy with taxes, then I would definitely get the help of a tax professional, because if you do really have high expenses that meet that threshold for making itemized deductions worth more to you than the standard deduction, then they're definitely worth paying for and getting that advice and getting all this done properly so that you can reap the benefit of paying fewer taxes if that's what you rate. All right, the next way, number 2, that you can use to maximize your tax refund is really fun. You can actually start a business, or actually like get a side job and work as a self-employed individual in the gig economy. Being a self-employed, you have a lot more benefits when it comes to tax deductions than you do if you're just an employee. Here's one good one, for example, the mileage deduction. The mileage deduction is business use of a vehicle. You can deduct a certain amount per mile you drive for business purposes. Whereas if you're an employee, your regular commute from home to work is definitely not tax deductible. But if you had a business that ran out of your home and you had to make a trip for a business purpose, then that trip, however many miles round trip it is from your principal place of business, which could be your home in this case, that whole trip would be tax deductible. And for 2020, the new mileage deduction that the IRS allows you to take, or allows businesses to take and self-employed to take, is 57.5 cents per mile. So every mile you drive for business purposes, you get to take that much of a deduction. So you can see how this can add up. Even if you're not completely self-employed, you can have a business of your own on the side separate from your regular job. And even if you do technically experience losses, meaning you had more deductions than income, you can use that to offset some of your employment. As long as you are legally in business and actually treating your side job or your side business as a legitimate business, it's perfectly okay for you to do that. Recent developments, such as the gig economy, has allowed more people to be able to do these side jobs and kind of be self-employed, at least on the side. So for example, if you work for a drive sharing service, like Uber or Lyft or something like that, you can actually deduct miles you drive for that against the income that you also make. So while there is tax implications for having a side job or being self-employed, technically you're not an employee of these companies. You would be considered a contractor, and so you would be considered self-employed. If you're doing a side job like an Uber driver or a Lyft driver or something like that, there are many business deductions that you can take for yourself because you are definitely using your car, your vehicle, as a business asset in that case when you are driving for them. And similar to that is Airbnb. If you're using your home for Airbnb purposes, say you're renting out a room, then some of the expenses that you actually pay on your entire home become business deductions because you're actually using your home as a business, okay? And of course, it's going to be prorated based on the actual amount of space that you allow your guests to use and things like that. So it's a lot more complicated and it's beyond the realm of this video. But just know that starting a business or working in a side job where you become self-employed, even if it's just part-time self-employment, those can lead to some really good business deductions that could actually help offset some of the income you make from your regular job, or definitely from some of the income that you make from your side job. So consider starting a business very soon if you want to take advantage of those self-employment deductions that the self-employed definitely get to enjoy over regular W-2 employees. And number 3, the last thing that I have for you is also super important. It is to actually just begin planning right now. Start planning and have good timing when it comes to taxes, because a lot of what happens when you go to pay your taxes the next year, it's going to be based on how much you planned in the previous year or how good your timing was. For example, let's say that you work and you get a Christmas bonus and you know you're going to get a Christmas bonus. Okay, so you know you're going to get an X amount in December, right? If you can delay that income until the next year, then you're not going to owe taxes on it this year. Then you're going to owe taxes on it next year because you only pay taxes in the year that you actually receive the income, like as a W-2 employee. Now, not everyone has that power over their employer to choose when and how they get paid, but if that's an option for you, then it's something that you could consider doing that has to do with proper tax planning and really good timing. Another really important thing that you need to do, actually, educate yourself as much as possible on taxes, or at least how they relate to your situation. Now, you don't need to be an expert, but you do need to know kind of how everything works, and that's going to help you prepare for when tax time comes, because all year you're going to be doing what you need to do in order to maximize your deductions, maximize your credits, and do whatever you need to do in order to pay the least amount of taxes completely legally. And furthermore, good planning also comes with good record keeping, especially if you're going to be doing like the itemized deductions that I mentioned in my tip number 1. Okay, the tax code is built on having good records. Whether you're an employee, whether you're self-employed, whether you run a business that is a separate entity, good records are essential, especially if you want to maximize your refund and maximize your credits, maximize your deductions, because you're going to actually need legitimate reasons for taking those deductions and taking those credits. And that comes from having good record keeping to make sure that you, 100% with no doubt in your mind, that you actually rate to take those tax deductions and those tax credits. Thank you so much for watching this video. I really hope you liked it, and I really hope that it can help you out when it comes time to maximizing your tax refund. If you want to return the favor, I'd really appreciate it if you just like the video, and of course subscribe to the channel, because I'm putting out new information on personal finance all the time, every week, and I want it to go straight to your inbox. Please make sure that you also hit that notification bell, or else you will not get notified when I upload a new video. Thank you so much for watching. I'm Zach from OnCashflow.com, and I hope to see you next time.